Hello and welcome to another update video about Ethereum. Not too much to update, it's just really literally a quick middle of the day update. We continue to have this situation here that an A wave down was most likely made in 5 waves, bottomed on the 25th of April. We're now in some kind of a B wave that can take different shapes, and we're going to take a look at that because this is where the edge is to be found. And then after the B wave, we should come down in a C wave. Okay, so there was one comment in the previous video. I just want to provide some education here that a C wave could never be shorter than an A wave. Yeah, and that was the basis for disagreeing with my wave count. I assume it related to this ABC structure here. Well, first of all, it could also be within the triangles. I don't know. But first of all, yes, it's true that most commonly the C wave might be a little bit longer than the A wave, but actually a very common target is the 1-to-1 ratio, means that wave A and C are the same length. So a C wave doesn't need to be longer, okay? So it could just have roughly the same length, which can mean it can be a bit shorter as well. But the very first common target for a C wave, even though it is not that common, but it is a common target, also called out in many Elliott Wave resources and also in the, well, let's say the most foundational book about Elliott Wave, which is the Elliott Wave principle. A common target for a C wave is the 61.8 extension of the A wave, which means the C wave is only roughly 62% of the length of the A wave. So that's, no hard feelings, but just education here. But yeah, most frequently I would be looking for a longer C wave, right? But if it related to the subwave structures here, I mean, look, if we talk about like a 15-minute chart count, you see all sorts of distortion, so you shouldn't really be too much looking at a longer C wave necessarily. But yeah, it's still, the idea is still that we're coming down here in an ABC structure in a wave 2. As long as we're holding 1533, the overall focus would remain on higher. Surely a bearish setup and a bearish possibility is there. New bear market lows still on the table. I'm leaning slightly towards we don't get another bear market low, but it will be a rocky road in my opinion. And I'm happy to change my view because, as I said before, the market is the boss. I'm not the boss here. It's the market, and Elliott Waves and Fibonacci levels, mathematics, very objectively will tell me when I have to start to lean towards, okay, we're going to get a new bear market low, and I will tell you as soon as possible. We're still in a state of transition here from a possible bear market into, yeah, I don't want to say bull market, but into something more bullish. Maybe it's going to be an extended bear market rally. Yeah, maybe it's going to be the bull market. But it's very, very on very shaky foundations. So I don't want to rule out a new bear market low. We still need to have it on the radar. We need to consider it for risk management purposes. And if we break below 1533, I would get much more concerned about the new bear market low. So just to clear that up. We go to the 30-minute chart. Here we still have this Elliott Wave triangle. I did count it in detail in the previous video. Yeah, this sort of triangle here. Other wave counts are of course possible, but it could very well be, and so far it's following that we are now in an E wave of the triangle. The E wave would be the last wave of the triangle, and the expectation is normally for the triangle to break to the opposite side of the E wave. In this case, it would follow the breakout to the downside. Very important because a lot of people misunderstand how technical analysis works. I'm not telling you that this is definitely going to be a triangle. Bear in mind, this is a B wave here. The triangle unfolds as a B wave, or the B wave unfolds as a triangle, at least based on what we see at the moment. It tells us what is the invalidation point of the triangle. So that would be here at 1963. If this rally goes higher than 1963, the triangle is invalidated. It cannot directly break down in a triangle structure anymore, and you can use that information for trading. However, a break above 1963 would indicate we are dealing here with a more complex, higher B wave. Another potential I outlined, but it will only become primary expectation above 1963. It would still be a B wave. The larger pattern not affected at all, just means the B wave can go a little higher. And then we have the resistance here between 1973 and 2067. That's sort of the most basic two scenarios we deal with here. Of course, a B wave unfortunately can go higher as well. I would find that less likely at the moment because the move down was in 5 waves. So you would expect the move up to be in 3 waves, and a B wave, if the A wave has 5 waves, the B wave is normally not going to be a very high B wave. It's all, this is all probabilities. But for now, I'm looking for another C wave down, either from this triangle pattern to the downside. And again, we should not go above 1963 for that. But if we do, then from the red resistance zone. Only if we break above 2067, we may have to talk about an adjustment of the scenario and wave count. But I would be surprised, to be honest, if that break happens on the weekend or if something significant happens on the weekend. Okay, that's my update about Ethereum. I hope you liked the update. If you did, please hit the like button, leave a comment and subscribe. And if you really like the content, then please check out the channel membership. Thanks a lot for watching. Bye-bye.